Good morning, everybody, and thank you for attending. Sierra Metals is a polymetallic producer, and we're a profitable one. We're actually coming into free cash flow and expect to have true free cash flow of about $30 to $35 million in 2020 as we ramp up production and we see our costs come down. Our forward-looking disclaimer, we do seek safe harbor. So Sierra Metals has three operating mines. Our largest mine is the Yauricocha Mine. It's predominantly zinc, followed by copper with a little bit of lead, silver, and gold, followed by our Bolivar copper mine in Mexico. That's predominantly copper with some strong silver and gold credits. And then finally our Cusi mine, which is the most junior, is predominantly silver with a little bit of gold coming from that. Looking at the company and some investment highlights, why would you invest in Sierra? We have a solid financial position of $40 million in the bank, free cash flow, 9-month adjusted EBITDA is about $46 million. That's going to come in about 60 to 65 for the year. 2020, we're forecasting between 110 and 120 million of EBITDA. We do have debt. We have a $100 million debt facility with Banco Credito del Peru. That's a 6-year term. The rate is LIBOR plus 3.15, so it's very manageable, giving us a net debt position of about $58 million. We do have strong growth. We've done a lot of brownfield exploration, and we've had good success there. We've expanded our mine lives. We just finished a 43-101 for our Yauricocha mine. The actual technical report will be filed today at the close of market. We also have an upcoming one for our Bolivar mine at the end of March, and we'll have a premier reserve on our Cusi property with a 43-101 that's due in July. We have been optimizing production, we've been improving our processes and trying to drive down our cash costs, and ultimately we've been growing production across all three mines. Looking at a quick snapshot of our capital structure, we have 163 million shares outstanding, 164 fully diluted. We do have 52% with Arias Resource Capital. That's a private equity fund out of New York. He owns that in two different positions. His first fund has about 32% of the outstanding stock, and the remainder is in his second fund is 20%. That first fund is rumored to have closed. It's a private equity fund. Nothing is private or public in the markets, but we know that he does have a bit of a position or a pressure on him to return that capital, and that has caused a bit of a downward pressure on the stock price as the market is wondering what he's going to do. We also have BlackRock out of London. Evi Hambro has about 10%. And then we have a few other family offices that own about 4 or 5%, leaving probably about 15% of the stock that's actually trading in the market. So we are tightly held. Management insiders have about 6 to 8%. We do have research coverage from 4 banks in the U.S. We do trade on the TSX as well as the New York Stock Exchange. Market cap right now is about 360 Canadian. As I mentioned, part of the growth strategy for the company has been exploration. We've drilled in the last 2 years just under 200,000 meters of drilling. This year we're going to be drilling about 70,000 meters. They're just finalizing the program, and then we'll have this slide updated. But again, we've continued to find new opportunities, opportunities that are closer to the mine head that we can bring into the plan within a year, that continue to provide us with growth for the mine and for to be able to expand the projects further. In terms of our production, you can see that we've continued to uptick and improve our production. In 2018, we were at 6,700 tons per day. We expanded last year the Bolivar mine and the Cusi mine, and we brought that up to 8,300 tons per day. This year, we're going to expand the Bolivar mine again to 5,000 tons per day, and our flagship Yauricocha mine to 3,600. And then next year, we're looking to bring Yauricocha to 5,500 tons per day. So we continue to grow the mines and lower our costs on a per unit basis. This is just the PEA results that we did on all 3 of the expansions, which justify their expansions. As you can look at the after-tax NPV and the return on investment for all 3 projects, very favorable economics. But what's most interesting is the combined net present value of $3.86 per share when we're currently trading just over $1.50 US. So we think that there's definitely some room for improvement in the share price. Quick snapshot, we have 3 different mines, as I mentioned. The Yauricocha is our flagship asset. What I want to point out here is that we have produced or put out our 2020 guidance, and we're actually seeing our cash costs come down for the most part. At Yauricocha, they're staying similar at about 46 cents cash costs and all-in sustaining at about 77 cents. The big difference between those two is just the treatment and the refining charges for zinc, which have grown exponentially in the last few years as China has brought a lot of smelters that were polluting offline. We do expect that to normalize by 2022 and come down a bit. Bolivar, we're seeing our cash costs drop to $1.30, our all-in sustaining to $1.75. So we're still profitable, even with the recent reduction in copper prices that we're seeing due to the virus coming out of China. And finally, in Cusi, we have our cash cost dropping significantly to $11.90, and our all-in sustaining is at $15 an ounce. We do expect to be able to bring that down further based on what we find in the 43-101 and further expansion capacity to bring this to about 2,400 tons per day based on what we find out and what the silver price does. We could see the cash costs here coming down to about the $9 range and the all-in sustaining to about $11. Production versus guidance for the year, you can see we list three different equivalent productions here. So if you look at copper equivalent for the entire company, in 2019 we produced about 112 million pounds of copper. This year we're guiding to between 127 and 142 million pounds of copper. So we continue to grow. We haven't really expanded our share count since 2011. That's the last time we did a financing. We stay at about the $162 million mark, or 62 million share mark. Revenue for the 9-month period was $164 million. We expect that 2019 is going to be very similar to 2018. The year was back-end loaded. Most of the production ramp-up that took place in Mexico was in the second half of the year. In terms of our net income, we had a loss, but again, we expect to come in very positively. The fourth quarter is going to be very strong. Cash generated was about $20 million. The one thing I want to point out is the capex. We spent in 2019 about $60 million, a little bit more than that. This year we're forecasting about 52. The following year that should come down to about 38 million. We have a sustaining capex level of about $25 million for all three projects. Cash flow, we did have positive cash flow in the third quarter of just under $2 million. The fourth quarter is going to be positive again, and so will all of 2020. So we are expecting, as I mentioned, between about 30 and 35 million of true free cash flow for the year in 2020. Looking at the company as a whole, why would you invest in Sierra? We have a strong growth story. Not only do we have three mines, all three of them are expanding and have expansion capacity. We're in well-established jurisdictions. Both Mexico and Peru have established mining codes. It's easy to find people that are trained and can operate the mines and that are versed in mining. We have an experienced management team. Igor Gonzalez, our CEO, was the CEO at Barrick. He was also the COO of Buenaventura, very seasoned operator. Ed Gamaris was our CFO. He worked for Ore Resources, which eventually was sold to Teck, and has worked for several other firms on their boards, very well versed. We have a diversified asset base. We're operational track record. We've continued to grow, drive down our costs, and improve productivity and production and profitability. And finally, we have a solid financial position. We have $40 million in the bank. We're not looking to go to the market. We're actually looking to return about $30 million in capital to investors this year, which we've already announced, because we know that our investors have been with us for a while. We'd like to reward them. That's going to be done in two tranches. The first tranche will most likely be done through a significant issuer bid, and based on what the share price does, we could look at doing a special dividend or a further significant issuer bid to hopefully drive up the share price a little further. And that's it. Thank you so much.